In just a moment, we're going to make a little trip to Chicago, there at the edge of the trading floor, and visit with Scott Gecas at Walsh Trading about what he thinks about these markets today and what he's thinking. First of all, let's set the stage for what we'll talk to him about, and that is a lower trend over here in the grain market. We've got the front month of corn right now on the lower side by 8.5 cents, $4.22 1/4. And that's only 1/4 penny off of the low. December new crop corn is at $4.27. That's 1/2 penny off of the low, and that is down to 8 3/4 cents. To the soybeans, August down 11 1/4, 8.90 1/4. The new crop November's at 9.07 3/4. That's only a penny off of the low, and that's down 11.5 cents. Then on to the wheat market, where September Chicago wheat down 11 1/4 at 4.91 1/4, 1/4 penny off of the low. Do you see a trend developing here? Over in the Kansas City wheat market, September is down 7 1/4 at 4.32 3/4, a penny from the low. In the Minneapolis wheat market, September down 3 1/4 at 5.26, and that's only 1/4 cent away from the low there. But on the other hand, cotton is headed higher today, and we've got the December contract trading at 63.51, and the March of that next year, March 2020, is up 95 points. As I mentioned, Scott Gecas is here with us, and he's there at the edge of the trading floor. What's the mood today in this market there on in the trade?
It's really quiet, even though with the pressure on the downside. I mean, the volume's a little light. It's really quiet on the floor today for a Monday. A little surprising. So everything's going to go back into the numbers, what to expect. I'll tell you right now, everybody I've been talking to, farmers and traders alike, they just completely lost confidence in the USDA. So we're waiting for those numbers to come out in this August report, which everybody's been expecting. If they come out with accurate numbers, then, they just have to prove themselves. So right now, everybody's kind of sitting on their hands, waiting to see how it's going to play out. That is confirmed by the option volatility. Last week, Friday, I was telling you that for soybeans, we have a $5 skew to the upside calls, which is very odd, especially seeing that the market is down with this much pressure. But what people are not making note of is when you're looking at options, they have time decay. So they have time decay on Saturdays and Sundays. So with the $5 premium that was there on Friday, it's still a $5 premium today, which means that the volatility had to offset that time decay. So the volatility continues to move higher, and the skew continues to move towards the upside calls, even though we have downside pressure.
Interesting. Well, when we talked to you last week, Scott, you had mentioned that, and you'd also mentioned that something just didn't quite feel right in the market, the fact that there could be something brewing and something developing. We still don't know what that is. We've got a crop condition rating this afternoon. Is that going to be a big deal?
I don't think so. There's a lot of different moving parts in this market. So you have the USDA report that's coming out. We have the expectations that China is going to import some beans just for good faith, which they haven't done all month. So we're waiting to hear that. Now, if they don't start importing, agricultural products, then Trump's starting to threaten more tariffs on $350 billion worth of goods again. So if that comes out, then you're going to see a little bit more down pressure. But right now, again, it's all headline risk. Everything's due to this. The crop condition report today might have some type of movement, but I don't think that's going to be that big of an effect with everything that's going on this month news-wise.
Okay, Scott. Well, we've had some wild fluctuations over in the protein complex for both beef and for pork. We're going to get to that in just a moment, so stay with us. More is coming up right after this break on the Market Day Report. After the close of business on Friday, there was a cattle on feed report that was released at 3 Eastern, 2 Central time. And the trade guesses and the actual report were very, very close to one another. Here's how it stood. The actual on feed number, 102. The estimate was at 101.8, so that was just about spot on. Placements, 98% of a year ago. The estimate was 97.7, again, very, very close. And the marketings came in at 97% of a year ago. Estimates, 96.9. So there really wasn't much here to talk about. Then there was also a number from the cattle inventory report. Those numbers also were very, very close to last year's numbers as well. In fact, many of those categories were spot on, identical to where we were at last year. Scott Gecas is still there at the edge of the trading floor here with us. And what did you guys make of these numbers here, Scott?
Well, with the numbers that coming in line are very as expected, which doesn't happen very often. But the thing that we're taking out of that cattle on feed report is the placements. The placements were off just slightly, giving a little bit more bullish tone to the whole factor. So if you're looking at cattle and you're looking for some type of direction, you have the U.S. economic numbers, which are pretty strong. So that should instill that there's a little bit more demand for beef just because of everybody's more working, everyone's willing to spend a little bit more money. So we're going to wait and see how that is going to play out. But the bigger factor is just a protein complex across the board is going to be the drop in production from the first to the first quarter. So with that being said, it's expected that demand to pick up later on in the year, right around that September, October area, maybe even a little bit further out. So that's what we're looking for. You're seeing a little bit more upside skew to the deferred contracts rather than the front months.
We've been on both sides of unchanged here today, Scott. It's been higher, it's been lower. Same thing with the hogs. Is there any reason behind that?
I think they're just trying to do price discovery and just trying to figure out which way we're going to go. Again, it's for a Monday. This is extremely light volume. You're not really going to see too much positioning back and forth. So that is expected to see on both sides of the market, either up or down. So until the volume picks up and traders commit to some direction, we have to wait and see.
Okay, Scott, thanks a lot. Have a good afternoon. Over here in the live cattle futures is where we get started.